Hello and welcome to Crypto Weeklies. In this video, we are going to discuss about Cosmos and its token Atom, conduct machine learning based price forecast, regression analysis, and much more. None of the content is financial advice. Let's get started. The reason we're going to talk about Cosmos and its token today is on cryptoweeklies.com. This is the performance parameter available over here at the indicator sections. The heat per this analysis, Cosmos has rallied by about 1.5% over the last 24 hours and has rallied over 10% over the last 7 days, where most of the similar time period, most of the cryptos are either flat or considerably down. Over the last 30 days as well, Cosmos and its token Atom has up by about 10%. So that makes Cosmos the key tokens to analyze at this point. You can check over here, market cap. Rank currently, Cosmos is currently token rank currently at around 44. Spot price slightly under $5. In terms of the tokenomics, analyzing particular token does not have a max supply. It's an L1 layer 1 token, market cap under $2 billion. In terms of the volume, it's more than 12% of the market cap, around 12% of the market cap, around billion. Does have circulating supply close to 400 million. There is a set inflation for the token supply that might explain the reason between the difference between price growth and cap growth ever so slightly, but again, they are moving hand in hand. This is the market cap chart, growth chart, and price growth slightly. So you can see the market cap had essentially a double bottom from the last September of 2024 with 5 billion, 0.4 billion back in early March of 2025, whereas the price back then, back in March of sorry, September of 2024 was at $4.47. This time around, slightly low at around $3.80. So kind of going hand in hand with slight delta between the price growth and cap growth. That means there is some inflation, but impact is fairly visible. Uh, and if you look at Cosmos and its token Atom uh, from its this Atom, so this particular crypto did have a series of lows in the bear market. You can see over here, lots of bottom at around $3.75. We did go slightly below back in early March, that is around 8th of March. If we move this to a weekly level, we'll have a better understanding of how these fib levels are coming into play and what are the some of the key moving averages to look for. The 21-week exponential moving average comes at around $5.36. That would be area of resistance to look for if the rally continues. The second level to watch is the $6.09 level. That's the 20 moving average. And then that the 0.23 fib provided a significant level of resistance for um, Atom back in March of 2024 when the price was around $13.50. That was the 0.2 fib level. Has not reached, the token price has not reached above the 0.23. That is a bit of a concern now at this stage of the bull run, especially in the post year, with the token close to the bear market shows that it set sometime in September 2024 rather than the highs of 2020. That is definitely a concern. Um, if we look at the machine learning based price forecast for Atom in this environment, we can check this home page of Crypto Week has one row dedicated to one crypto, their machine learning analysis, then regression and accumulation related model. We'll start with the machine learning based price forecast for this is the weekly price of Atom. Again. Essentially, instead of a bar chart, we have taken analyzed based on the weekly averages. So this is, if we turn this into a weekly into a line view instead of a bar chart, you can see that the similarity between this is the price action in blue, the weekly average. used this exact price action as a training data for our machine learning model, comes up with three scenarios for price forecast for Atom in the next 6 months. Again, not financial advice. This uses seasonal ARIMA, LSTM, and XGBoost as a combination machine learning model technique. Looks at what the fair value is with respect to the trend behind the price action, and estimates what is the one standard deviation bull case that is in the yellow line. That means in the next 6 months, if there is no euphoria in the market, what is the bull case for Atom using historical price action and machine. The model says that price action could go as high as between $5, roughly to about $8.75, without any euphoria in the market in the next 6. Whereas if, with the euphoria case, that is, if there is a two standard deviation rally, like Atom got early on in the post halving year of 2020, or the second half between August to about September of 2020, that two standard deviation rally could take, per the machine learning model, price between $5.40 and about $20. So $20 Atom would be considered 95 percentile bull case, or 5% chance per the model that the price goes above this $20 target in the next 6. Again, that is 5% to the upside and to the downside. That means only if you divide that 5% by 2, that's only 2.5% chance for the probability theory and the normal distribution theory, that the price goes above $20 next 6 months per this model. Again, check the tabular values, 95 percentile, for example, set around for early September of 2020. There is a 95% that the price is between $19 and again below. So as we approach the first half, early half of the second quarter of 5, what remains the key is to observe if cryptos do get that April and May rally like they did back in 21. If they do not, how they pan out in the recovery pans out in the next 2 months. Watch. On the downside, the one standard deviation non-panic bottom for Atom for this model could be some $20, and roughly speaking $4, between $4 and $2. That's the next 6 months target per the machine. Well, again, all of the models are updated as new price data arrives. Again, we don't change everything in the model. We don't touch the model. Basically, we just add price points as and when the price action data is available at a daily level, and try to analyze what the forecast could be with that new price point. The regression based valuation, um, for the Atom token, especially with this non-linear polynomial regression based fair value, it captured by this pink line in the middle, helps identify if the token is in an accumulation stage or in a distribution stage. Whenever the price is above the pink line, argue that the price is above the fair value at that point in time. Again, as that was the case since October 2023 till about July of 2024, price did appreciate and then eventually come back as the 2024 drawdowns between August and November. But similarly, as the December rally, this price did go above the fair value and now has come down. If we apply standard deviation techniques to identify bottoms, even more accurately, or even more probably uh, probably accurately, we can apply one standard deviation residual to the downside to capture, not capture a falling length, but also uh, be mindful that an accumulation is, and timing the exact bottom is very difficult, whereas identifying a range is relatively easy. Identify Go with that framework and identify one standard deviation residual applied to the downside to identify some, whenever the price exhibits that 16%. The way I'm calculating this is 68% of the time the price action stays between this yellow line and the green line. I'll get rid of the fair value um, for each. So the rest of the 32% occurs, of that 32%, 16% occurs to the upside, 16% occurs to the downside. So a 16% bottom is whenever the price is below the green line. Again, now the green line is at around $5.03. That means the current price of atom at $4.86 per the regression model is below the 68th percentile bottom, or again there is only a 16% chance that the price stays below this level with this regression based framework. If we assume that again, there's a big assumption that if in the rest of 2025 the price for atom goes above this yellow line like it did back in March of 2024 as well as in December, for that one standard deviation ceiling estimate for atom per this model comes at around $11.50. Again, if we look at that $13.50 level, if we extrapolate that uh, that rising function that we have for the one standard deviation peak to like 6 months into the future, those two lines could coincide at around $30. Again, as the price action kind of matures in the next half of 20, if at least the second quarter of 20. Um, so that's where the fair value, the one standard deviation target for atom is. Fair value currently as the one level to watch is at around $8 level. That's the fair value per the model for atom. If we try to analyze the simple moving average based target, the risk levels, this price color coded with risk levels, they say that at around between this third best time to DCA per this model. Again, this model, the utility of this model is to identify, again, with dual purpose. First is to identify, let's say, decent time to DCA in the model, sorry, in atom. And not that great of a job. This model did not do great of a job to identify the bottoms, but it did identify the 2024 bottom to the dot on September of 2024, as well as the June 2022 bottom. Again, not that helpful. This model is not that helpful when the bear market has just commenced, but after cool off in the bear market, definitely towards the lower end of the bear market pullback, that's when it does identify some of the good buy zones. And the opposite is that whenever the risk is above 50%, let's say, that's when this model did a fairly good job in December 2024 identifying that the risk levels were more than 50% to identify that short term. So if we go with that approach and try to extrapolate, if the risk were to go back that 50% target between target green dot, what could be the price? Per this model, price could be somewhere $19.75 and about $24. So that's the range forecasted by the model in that medium term risk levels. At a $24 atom per this model is at around 0.5 fib level. So if from its previous high to the bear market low, assuming that the bear market low is at around $3.80, and the previous all time high was at around $44, retracing that 0.5 or 50% of the move uh, would put the price at around $24. That is a area of confluence between the SMA model and the Fibonacci levels of technical. If we look at the DCA model, which is again an estimation based on the fair value regression approach that we looked at the bar chart over here under the regression. So instead of looking at bar charts, we are uh, applying the regression based estimation to price action at a daily level, and based on the relationship between the price and the regression based fair value, identifying if what the risk level for atom is at any given point, and color coding them between the cooler colors and the warmer color as the risk levels kind of heat up. Right now, per this model, the risk levels have gone down quite a bit. On 2nd of April, they were at around 10%, now at around 13%. For this model, if we again, similar job this model has, if we identify both, go down further down to the risk curve, whenever the risk is less than 10%, identifying that buy zone in this purple color, and the opposite is that whenever the risk kind of go up, that is above 50% risk, identifying the top like it did back in December of 2024 as well as in March. Well, if we ask this model to identify whenever the overvaluation phase kind of begins, and do it pictorially as well as in the tabular format later on. The pictorial view says whenever if we add about 2 standard deviation residuals to the fair value, we get that whenever the price is in euphoria and eventually a good selling point or a distribution point, not financial advice. For this model, if the prices were to go to about $14.88 as of now, again, this model gets updated every day, incorporate the latest price points, and again, the regression function tries to match the euphoria at that point in time. So right now, the easy way to conclude that is if there is a rally in the market, the model says that at around $14.88, that's where uh, the cutoff point is, and above or we're really close to that price point. Again, no, there is no guarantee that the prices go to that target. Again, targets get hunted out. So in March, price did go above the dotted red line, but in December fell short by about 10 less than 10%. So again, you can use this as your own at your own discretion. Again, when used in confluence with the risk levels, and this dotted red line together, they do help tell a story. So if the hypothesis is that that the token eventually goes to that 50% risk, per the model, the prices could be at around $10, I mean $20.70, or sorry, $10.80, and about $13. So let's say a confluence occurs between that $13 target and $14.88 target. So somewhere close to that early $13 or late $12. That's when, again, even if there is a further pullback from that point in time, again, that would still be close to a 3x, slightly under 3x move right now with the price of at around less than $5. So 2.5x move from the current price. And identifying the other side of things is to identifying the bottom. You can model does have this 1 standard deviation bottom regression line again to identify. So whenever the price in the bear market falls below the dotted green line, and confluent, another degree of confluence with this is the color code has also shifted to this risk levels between between 0 and 10% risk, that is in this purple color. Those two price points, or those two parameters, when used together, does identify the bottom, did help identify the March bottom as well as the April 2nd bottom again. Although the price was above the dotted green line, the color was purple. That means the risk levels were less than 10%. Again, thousands of hours work of effort single-handedly done to create this model, update this model, have the website done. Again, lots of machine learning based efforts are gone into making this content. So if you enjoyed this and want to this, again, all of the content is available for free without any ads or any sign up requirement. So if the only thing that I would ask is, if you enjoy this kind of content, please give us a like and subscribe. Again, very few places on the internet offer this kind of analysis. So again, that's what I wanted to say about that. Coming back to the topic, another way to identify how the valuation of atom is kind of panning out with respect to the time weighted average price. The blue line helps identify what is the time weighted average price at any given point in time, and what is the relationship between the price and the time weighted average price. Helps identify that relationship, identifies the riskiness of an asset at any given point in time. Per this uh, model, again, another area of confluence is that the time weighted average price for atom is at around $10.60, and you can see that the relationship with price and time weighted average price is series of lower highs when with respect to that blue line are occurring since about September 2022. Back then, the time weighted average price was $12, but in that rally, the price was went as high as about $16.50. Now, in March rally, the time weighted average price was at around, roughly speaking, $11.50. The price at that point about $14.20. Now the time weighted average price is at $10.40. The latest rally fell short of the time weighted average price. You can see here at around $10.92. That was the time weighted average price in December. The price grew at a daily high at around $10.42. So in the next rally again, this if this time weighted average price holds as a resistance, that area could be at around $10 for the next rally. That would be again slightly more than 2x from the current price. And again, the if the underlying hypothesis is that Atom is a good project and it has a rally beyond the time weighted average price like it did back in 20. This looking back, this price action zone since about May of 2022, barring a few fake outs, the entire zone could be viewed as a accumulation zone. Again, with that hypothesis, right now, as the time price is below the time weighted average price, this model says that the risk levels are actually zero. They are never zero, but this model helps put the risk and reward in perspective, and all of these models are fed to the estimated bull run target for any crypto. Again, Atom is just one example that we are covering. Our all of the top 100 crypto market cap. So if even if I'm not making videos of them, the content is available for all to use your own analysis. This is just a signal, um, not financial advice. For this model, again, this risk reward based analysis, the three models that we saw, the time weighted average price risk was zero, SMA risk was between 20 and 30%, regression risk 10 and percent. The weighted risk comes at around 12%, and the estimated bull run peak with all of the models, if they have a combined weighted risk of 100%, again that would necessitate that all of the three models individually go at 100% risk. Again, the likelihood of all of them triggering 100% or 0 point, let's say in fraction 1 1 and 1 over here at any given point is very low. So with 12% current weighted risk and with an estimated bull run target, which has the hypothesis that risk at its peak are at around 95%. So instead of having that kind of a unrealistic bullish case scenario, what can be done, again not financial advice, again at around $36, if you take a 60% or 80% of this target, that gets you close to a realistic scenario wherever the when at that given point the weighted risk is somewhere between 60 and 80. So what by that I mean, the range for Atom's rally for this bull run is between 60% of 36. So that would be somewhere, and calculate over here, um, is from alpha, so zero point 0.6 into 36, at around lower end would be at around 12 21 $22, confluent with that zero point 0.5 fib level over here, and the higher end would be at around, for the model would be at around $29, slightly close to that 0.618 fib level at around. And with that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again too. Thank you and have a nice day.